Welcome back everyone. I hope you're all having an excellent day. In today's video, we need to talk about the Bitcoin charts. Of course, taking a look at Ethereum and Chainlink as well. Bitcoin, over last night's price action, did have a move deep into the bearish order block that we've been watching over the past almost 10 days here. This is a very important resistance for us, and we did end up closing above this resistance slightly. However, that did come with an indecision candle. This indecision candle can show us some momentum loss from the bulls that were buying up the price action in this region. We also came to the 19th of June highs. As we can see, this block of price action that did end up giving us the impulse to the downside, setting in another lower high, which is our bearish order block here. So ultimately the same block of price action, taking out those highs, taking out all of the stop losses in that region, and ultimately closing back below, giving a nice bearish setup on the charts. However, for our market structure for now is holding slightly, but it is holding right now, as you guys can see. We'll get into that as we do still have higher highs and higher lows. We did set in a higher high yesterday here, so that's going to be very important, but it does still make for some nice shorting opportunities. As always, we'll be going through the trade setups towards the end of the analysis here. That's going to be very, very important to speak about those and our thought process behind those. Most importantly, we have to look at the high time frames here, the momentum and regions of high interest for trading opportunities. We'll go through the open interests as well. As you can see, we have had a beautiful move to the downside. However, that has come with a decrease in the open interest. As you guys can see, on our move to the upside yesterday, we had a very nice increase with the very nice uptrend that we had. So this could be perceived as a little bit of an unsustainable move to the downside for some, but I will be speaking about this later on in the video as well. So a lot of new things to talk about in today's video. But before we do start, I would very much appreciate it if you guys left a like on this video. Also, please subscribe to the channel and click that bell icon on my videos, as they are no longer being recommended by YouTube, often even to the subscribers that I have that have the notifications on for the channel. My best guess is because most of my intros make my videos unable to be monetized by YouTube itself. Basically not making money from those due to the movie clips or music used in them, but I do enjoy them, and so do you guys, so I will continue to do them. And even if my videos are unable to be monetized, obviously, as that is not important here. So as you guys may be aware, if you are a long-term subscriber and if you do watch the videos till the end, I don't usually ask you guys to like the videos until the end of the video, which is probably not the smartest idea. So I would very much appreciate it if you guys continue to support the videos each day, leaving likes on the videos, and of course subscribing if you are not subscribed, and clicking the bell icon to get the notifications for when I do upload a video. With all that said, let's get right into it. So I'm going to start off here on the 4-hour time frame. Speaking about these swing highs here, like I said, we did have a swing failure pattern confirm, taking out those highs and closing back below it. That is a bearish setup. It is a very low risk bearish setup, as you get to put your stop loss right above the highs, of course, with a very simple invalidation to the downside. Now, we did end up closing back below the R1 as well, and the EQ of the bearish order block, giving us that momentum to come a little bit further to the downside. I am in short positions from $36,000. I will show you guys those positions and the reasoning behind those. Of course, we did speak about some of those reasonings at the start of the video. Most importantly, taking a look at this indecision candle that we did set in on the highs. If we look at our stochastic, which is our momentum oscillator here as well, we did end up rejecting, and we were right in the critical zone here. So a reset of the stochastic is not the end of the world for the bulls either. So we need to be definitely keeping this in mind. When we were all the way up here, we did have another move to the upside. This is why you do not just short just because we are in overbought territory. You want to actually be looking at the charts here. We did continue to set in high lows yesterday, giving us that next push, but now we have rejected and losing the critical zone, but not the bullish controlled territory yet. Now, most importantly, if we look at our volume, guys, you can see that overall we do still have declining volume even inside of this range since our move to the upside. So if you were trading, for example, the double bottom formation, it is very important to actually be watching the neckline, which would be somewhere around our bearish order block, with volume confirmation. So for any patterns that you're trading, it is very important to be looking for that volume confirmation. We did not really see that. We did see slight volume coming in here, but that was mainly the bearish volume coming in from our resistance points. And if we take a look at the volatility here, it also did not confirm a move anywhere inside of this range. With break of resistance, we want to see volatility expand. We want to see volatility go to the upside here and expand, basically. We do not want to see still contracting volume when we do see a break of such an important region, such as the bearish order block that we have been discussing since basically the 21st of June, for example. So ultimately, this is still showing us ranging price action. This is still very good for us traders that are looking for these trading opportunities, such as the short positions, such as even the long positions. So if you guys do remember, our $31,000 long positions, we ended up closing at the bearish order block. There is reasons to that because we want to see confirmed closures above these regions with volume and open interest, which we have not seen thus far. So price action has actually now come back into this range, and I think it will be much simpler for me to go ahead and put on the VPVR and also just go ahead and take a look at our Discord group here so I can quickly explain to you guys what we are looking at and what we were looking at this morning, because it will be very important for our point here. So taking a look at this, I did post for you guys this morning that we back tested the channel as resistance. So as we were in short positions at the $36,000 level, that was because we actually retested the bearish order block once we came right back into it with a downtrend confirmed. So taking out the lows right here and creating some lower lows and lower highs, which is a confirmed downtrend. Once we come back into the bearish order block, we can look at that resistance as a nice shorting opportunity. From that region, we did end up coming down around 4.6%. Now, of course, we want to be taking profits at each level to the downside here, but with this range that we have been looking at, we've now found acceptance back into it. So if you miss these short positions up here, you could be looking at a move into the range and a retest of that resistance. So what happens to broken support? It becomes resistance, and we can look for a support resistance flip, which would be once again a low risk shorting opportunity. But let me go ahead and explain what we spoke about this morning. So backtested the channel as resistance. We have bounced from the value area high of the previous range. So this is our volume profile. This is the fixed range, however. So we have bounced from the value area high of the previous range, which we have now found acceptance back into. That's very important. You don't want to be getting into long positions straight away when we have acceptance back into the range that we just broke out of. So if bears can break the value area high, it is probable price tests the point of control first and potentially a full oscillation to the value area low. And so if we actually put on our fixed range, so I can easily explain this and go ahead and get rid of a few other things to keep this clean, we can see that we broke above and into this area on the 28th of June. Now we want to actually pull this before we ended up breaking out of the range. And once we find acceptance back into the value area high, which is actually at $34,969, we can be targeting, and it is very probable that we actually do come down to the value area low of the range, or at the very least the point of control. So as you can see, that has come down to the value area low. It is a very slight front run off this level. So obviously there's profit takers before that region, and there's going to be some long positions coming in as well. So the value area low is at $34,281. Inside of the current range, that is the absolute most important support all the way down to the S2, which is $34,122. So this volume profile is very important because we've found acceptance back into the range. We want to be looking at it. Now, like I said, this is a lower time frame trade as well, because if we go onto our 4-hour time frame, of course, the stochastic was a very good sign this morning, and the bearish order block on the high time frames here. However, inside of this range, that is the regions to be watching. Now, if we end up breaking the value area low, and especially this last higher low that we have set in at around $34,105, that's when price action starts to look much worse. So we can take those lower time frame trades here. However, breaking this region, well, that's going to give you a potential downtrend confirmed and a move down to the weekly pivot. Now, I believe that this is getting a little bit ahead of ourselves, but since you guys like looking at patterns and you guys like doing that, so we can look at this right here potentially. Okay, I actually would not call this a head and shoulder. So I was going to say that maybe this is going to be turning into some head and shoulder, but that would not be right, because we actually have a we don't have declining volume. So for our patterns here, we want to be looking for that declining volume. Now, like I said, the VIX did not confirm a breakout. It also has not confirmed a breakdown right now. So overall inside of the range, so volatility still contracting. We should get a move here very, very soon, in my personal opinion, over the next 24 hours. Based on the 4-hour volatility, I believe that we should be seeing a very nice move indeed. And based on the volume as well, which is declining right now, we will be seeing a move quite soon as well. So definitely keep those in mind here. Coming to the downside at the moment, we want to quickly look at the open interest. So as we have been moving to the downside, open interest has actually been declining. So this could be looked at, like I said, as a little bit of an unsustainable move, because for a healthy trend to the downside, we want to see an increase in open interest and an increase in volume. Right now, we are seeing slight increases in volume, but for example, if you look at yesterday's price action, when we were moving to the upside, setting in higher lows here and higher highs, higher lows and higher highs, higher lows and higher highs, we were actually slowly increasing in this open interest. Overall increasing, we did have a slight dip here on the move to the downside once again, which showed us that that was not a sustainable move, and we did set in another higher low before continuing to the upside. So yes, this could be a bunch of things right now. Open interest going down because of a lot of liquidations at these highs. People, prematurely longing without confirmation. Also, basically, more short positions closing out and more long positions closing out from the highs. So profit taking at the highs, and ultimately, this is one thing that I'm definitely going to be watching. If we end up moving back to the upside, and let's say we get back above this channel, that is when I look definitely back into long positions. If I am not already in long positions, let's say we get above the weekly R1 here at $35,745, which is also the EQ of the bearish order block, and we have open interest increasing. We see the volatility here actually increase as well instead of contracting, and we see the volume increasing. That's going to be a nice setup for a move to the upside. But for now, we've found acceptance back into the range, therefore we need to trade the range as is. So even on the 4-hour time frame, we did have a move into the range, a move to the median of the range, and on the retest, if you were trading the 4-hour, it was very possible as well, because we ended up breaking support and turning into resistance. So an SR flip off that resistance point and coming down about 2.5%. Now, I'm talking about all these things every single day, and I'm trying to explain my thought process to you guys, because I don't want to just tell you, we're going to the upside. I don't want to tell you what you want to hear. I want to tell you guys not to FOMO. I want to tell you guys to wait for confirmations, and this is why we speak about these trade setups. At the end of the day, longing into a major resistance point, when we do see a swing failure pattern, when we do see an indecision candle with no volume confirmation and volatility confirmation, is not a good idea in many, many cases, guys. So even if you did wait for the retest, as that is the smartest thing to do here, is wait for a retest, right? So we've broken resistance. Often we're going to test that resistance once again, and we're going to get rid of all those over leveraged long positions. So if you did decide to buy this support down here and a resistance support flip up here, right, and didn't notice the indecision candle, didn't notice the swing failure pattern, you would actually be taking a slight loss, right? If your stop loss was right below, you'd actually be taking a very slight loss. And if you would actually trade it the way we did this morning, you would be taking your profits at the top of the bearish order block. So let's go ahead and actually go through those trading positions and speak about those right here. So I want to take this over here and take a look at this. So we want to go through from this from yesterday, last night. So I end up closing more long positions from 34,435 at 35,587. This was on one of my separate accounts. This is the beauty of running two accounts inside of ranges, because you can manage on market structure and also be trading your levels as well. So like I said, I've stayed and stuck to my analysis basically, and took profits at the EQ here, at the bearish order block, right above it actually. But overall, I didn't catch the exact high here, but that is okay as well. I was taking profits because I didn't see that volume confirmation. And then we ended up coming to the downside a little bit. So the daily pivot to start of the day off, we had 35,739 to 35,997. I want to speak about this because it is important. We had a move down to the daily pivot, which was support. That daily pivot had confluence with the EQ of the range. This horizontal line that you see right here, that's the EQ of the bearish order block. We also had the weekly R1, more importantly, in confluence with this area. So this region was nice to look for a bounce, and we did end up bouncing up about 1.1% from my entry. This is of course with leverage, but bouncing up from that region and instantly closing that. Now, why would we close that? Because we've come back into the bearish order block. We are resisting the bearish order block right now. So what happens to broken support? It often becomes resistance, and you can look for those shorting opportunities. And so we did end up moving our way to the downside. And then we ended up picking up some more short positions at $36,000 here, closing at $35,420. So on the bounce to the upside, flip those longs into shorts because we've come to the top of the bearish order block, taking some profits at $35,420, and then taking more profits at $34,700, which is our target right here, which was our target at the S1, because if we are shorting the pivot, we are looking for take profits at the S1, at least your take profit 2, for example. So I haven't posted the most recent one, of course, because we are coming to the value area low just right now as I'm making this video, and I want to get it out as soon as possible for you guys, but getting pretty damn close to those lows and to the value area low as well. Before we move on to the Ethereum and Chainlink charts, I want to quickly show you guys a post that I made this afternoon in the private Discord. Now, this is going to be very important because it's going to completely coincide and make sense with what we've spoken about over the last 40 days since we broke to the downside and since we have been ranging. So it's going to be very important, and it's going to be all about patience, not using high leverage, not trading these breakouts without the volume confirmations, without all of the confirmations that we speak about every single day here. So let's quickly go over to the Discord. Now, what I said was today is a fantastic example of why patience will make you money and FOMO will make you lose it all. Thinking and saying, what if we break out? What if we go to all-time high now? Because we had a lot of these questions yesterday. That thought process is dangerous. When you're feeling like this, best to take some time off the charts and come back with a fresh outlook the next day, which has now offered up a fantastic shorting opportunity upon support loss for all of us, right? Look at the charts and consider what regions can I make the best, lowest risk trades at. Whether you are wrong or right, it really does not matter at the end of the day, right? You want to be picking the low risk trades so that if you do take a loss, for example, if you were to long here and you didn't take your profits on the move to the upside, you want to only take a slight loss. So if you are longing around the $35,600 region and you think that this breakout is going to continue, you have your stop loss right below the lows. If you're using high leverage because, the fear of missing out is making you want to actually get into a high leverage long up here, even though we are seeing, no momentum. We are seeing, momentum on the lower time frames actually start to flip back to the downside. No volume confirmation, no volatility confirmation that we spoke about on the 4-hour time frame. It is not the smartest idea. You'll always get an opportunity. Remember that the market is always going to be here, guys. And at the end of the day, your accounts will not be if you continue to kind of make these high leverage trades that are very, very high risk. At the end of the day, leverage does not matter if you're actually managing your risk correctly, if you are using the correct position size in every single trade, and if you're following the position size formula and all of the other things that are very, very important. So that's kind of to leave it off on Bitcoin. So since a lot of you guys aren't in the group, I wanted to quickly potentially help you guys out a little bit, change your mind a little bit with trading these breakouts or even trading these breakdowns. I mean, I wouldn't be shorting right now, for example, since we've actually moved back to the downside this much. If you've missed a short, you need to wait patiently because now look at this. We've actually come back to the local support we've discussed. So could we bounce up here? Most definitely, because we are actually still ranging. So what you want to do is pick the lowest risk trades based on your pivots, based on your Fibonacci levels, because at the end of the day, they're going to be the most important. And of course, your volume profile, taking a look at the stochastic, taking a look at the momentum and the volatility and the volume to confirm these moves either to the upside or the downside. So let's now move on to the Ethereum USD charts. I'm going to start off on our Coinbase chart here. Now, of course, we did end up coming up here and forming a very nice kind of base before moving back to the upside. The $2,095 level was, of course, a high time frame region, which is very important. we did come down to our bearish order block, or bullish order block, sorry, before bouncing up from $1,700. And we started a slight uptrend here. Now, as you can see, the uptrend is actually still holding on the 4-hour, very slightly, but just like Bitcoin, it is still holding. And that is because our last high low was in this region. And we have now actually come back to that $2,095 support, the key support here, and bounced up a little bit, right? So that would make it, make this high low here very important to hold. Around $2,084. Need to hold that region. If we get any closures on a 4-hour time frame below this region, I'd be targeting at the very least down to the weekly pivot at $1,981. If we can regain the R1, I'd say that this is going to be another high low. Of course, if we hold here, that's going to be another high low in the price action, and we're going to start to set in high highs and high lows. But right now, we're seeing some sell pressure. If this level is lost, that's not going to be so good. But if we can move our way back above the R1, that's going to be more or less your high low confirmed and potentially move to the upside here. However, if you look at the 4-hour stochastic, it is in the process of resetting. It did get very hot up here, and it is in the process of resetting right in the critical zone. So this bounce is going to be very important. Can the bulls hold up, and can the bulls hold the market structure, or are we actually going to be testing that weekly pivot? And at that point, it's going to look a little bit more bearish than not. So very important to be watching this. And if we go into the 1-day time frame, I do still think that this has upside as long as we are above around $1,992. And if you want to go on Wix here, which is quite good as well, around $2,049. So don't really want to be breaking back below that breakout point. So let's look at the wick, for example, the wick that we kind of set in before moving to the downside here, and then actually breaking that region. So really don't want to see any closures below that $2,052 level based on a daily. And the reason it looks much better here is because if we look at this stochastic, it's actually just moving its way back to the upside. So unless we see a rejection at the bearish control territory and reject the neutral territory, then ultimately this is going to be a little bit better for the bulls inside of the range. Now let's move on to the Link USD here. I want to take a look at our Binance chart. Of course, we have our bullish order block down here as well, back from the 12th of January 2021. We have bounced up quite nicely from there, and we did end up breaking back above and closing back above the median of the channel. So this is the range that we've been looking at. We've been trading short positions inside of the range, and we've discussed these kind of setups. This is on a very low time frame, but once we set in the downtrend, we did move down to the bottom of the channel. So this is the head and shoulder reversal formation, bringing us to the downside with market structure still down. And then we ended up coming up for a rejection at the median. We ended up rejecting the median on the 21st of June and actually on the 25th of June. But now we've broken above it, and we broke above the weekly pivot. That weekly pivot did give you guys a nice longing opportunity because we actually retested it. So resistance turning into support, that's a 13.3% bounce. But now price action is once again coming back to that region. So it's important that we hold that. We've actually lost the last high low here on Chainlink. So the bulls will definitely need to get a bounce inside of this region. If we break back below the weekly pivot, it is likely that we break back below the median of the channel. And it's likely that at that point, that is going to be the major resistance to get back above, because we would not want to see a closure back below there. Of course, a falling channel does have probabilities to the upside. The bulls do have high probabilities to actually break this to the upside, of course. So a break above the R2 with confirmation, meaning volume confirmation, a closure on the 4-hour time frame, or if you want to be safer on the 12-hour time frame, that would be actually resulting this channel to the upside. We can get some targets for this channel both to the upside and the downside. Remember that since it is a falling channel, the probabilities are with the bulls here, and that would give us a target of $33.46. And to the downside, well, that would give us a pretty damn low target of about $2, which I do not expect to happen right now. I would still be trading it based on the bullish order block here and based on the levels. So if we were to break the bullish order block, I would be expecting the next region down around $10, because that is actually the kind of base that we built before our move to the upside. So more or less still inside of this range. The bulls will definitely need to put in some work to be able to result this to the upside. But once results to the upside, I think that we could definitely be on our way for a reversal in the price action. But it's important we get back above the highs of the 27th of May as well, because that's actually where the target is. Around that region is where the channel target is. So that's about it from me, guys. I hope that you've enjoyed today's video. Please do remember to leave a like on the video and subscribe to the channel. I would very much appreciate it. And if you would like to join the private technical analysis group, my Discord username is down below in the description, and I will send you all of the information. Have a lovely rest of your day, and I'll catch you in tomorrow's video.